Hello and welcome back to another edition of Lipper's Fund Market Insight. I'm Matthew Lemieux. I'm back again talking about weekly mutual fund flows for the week ended March 21st. So as the quarter's coming to an end, I think a lot of equity investors are looking back over the previous 3 months and are really quite happy with the way things have gone so far this year. If you actually look at the U.S. security indices, you see that the NASDAQ is looking to close out the quarter close to about 18%, which is really quite spectacular, with the S&P 500 around 11% and Dow Jones trailing a little bit by 7%. That said, we did see a little bit of weakness this week in the markets. I think some of it probably had to do with a little bit of window dressing, maybe some profit taking by some of the institutions out there. But there also has been a little bit more concern kind of seeping into the market, and that really is talking about looking forward at the thoughts about a possible European recession, as well as new economic data coming out of China that their manufacturing has slowed quite a bit, and really what the downstream effects of that are going to be. So a little bit of mixed story, but kind of a slowdown in the market. We're going to have to see how it goes forward. But let's take a look and see how that really translated to flows this week. If you actually look at our macro groups, overall the conventional mutual fund business pushed out about $12.7 billion. Sounds pretty bad, but of course, as you can see, most of that came with money markets as they pushed out $16.7. Equities actually had a decent week, pulling about $700 million on the mutual fund side. Taxable bond funds remained strong with about $3.3 billion. And if you look at municipals, really I have it as zero, is about $44 million in, very flat for that group. So let's talk about the first group that we usually do is equity funds. So as I mentioned, we saw about $700 million coming in, but really what the big news was, if you look at the breakout, the domestic versus non-domestic, we saw almost $1 billion of domestic money coming in to the mutual fund equity business. And this is the largest weekly amount we've seen since August of last year. So it's kind of, could be a good sign, might not be. I mean, hopefully, as people are feeling more confident to come into the domestic equity, it's not really at the top of the market. We're going to have to see how that goes. Non-domestic pushed out about $300 million. If you looked at ETFs, because we usually kind of try to touch on that, again, it was pretty flat, actually a little bit down, about $500 million, with SPY pushing about 1.2, but still pretty muted out there compared to what we've seen with volatility in flows over the last few months. So let's go over to taxable bond funds. Taxable bond funds continue to really have a good run when it comes to attracting assets. This is their 14th consecutive week of inflows with $3.3 billion. And again, the story really is quite the same. There's going to be a part of the group that's looking for quality and corporate investment grade, $1.2 billion in, as well as other people that are really seeking yield, with high yields pulling in about $800 million. If you look at year-to-date, corporate investment grades have pulled in a whopping $2.1 billion so far, with high yield about 12.3. So very popular groups, and most of the money obviously has been going to those two groups so far this year. Government mortgage funds also have been somewhat of a story, with about $300 million coming in. They've seen 16 consecutive weeks, and I think we'll continue to see interest in that group, especially as we see some mortgage rate rising and maybe less risk of refis in the market out there. So on to the third group, which is muni funds. I mean, as I said before, about $44 million coming in. This group is relatively flat. Overall, it's been quite good because we've seen a pretty decent run in municipals. If we had to kind of take a deeper look, we see that the national group pulled in about $65 million, and a little bit of a surprise because we have seen some interest there. High yield munis pushed out about $14 million. Overall, again, pretty flat and a non-issue, but we'll have to see where it goes and if we continue to see if it breaks out of that or maybe dips into the red in the upcoming weeks. The last group we're going to talk about is money market funds. As you saw on the first slide, we saw huge outflows from this group, $16.7 billion. Really something that we expect this time of year. March 15th was the corporate deadline for tax payments. And actually, if you look at the split out, you can see it seems pretty prevalent that most of the money was coming out of institutionals, $18.9 billion out, and actually a little bit of money into retail. Again, this could be money shifting out of the market as people take profits and kind of set it on the sideline for a little bit going forward. So overall, the week it was a little bit mixed. Markets were a little bit more quiet. I think looking forward, we're really going to have to kind of wait till earnings season or any other big news comes out. But I really don't expect anything that's going to be driving the market, any big news, until we see that. And I think investors are going to be looking to that point to see, is the first quarter, we've seen the performance, especially in equities, been somewhat, I wouldn't say a fluke, but is it going to be a prognosticator of what's going to come through the year? And I think looking at Q1 earnings is really going to help drive that. So if you need any more information on the flows that we're talking about today, you can visit our website. It's at www.lipperusfundflows.com. You'll see a little bit more headline data and some numbers there every week. Or again, you can just join us back here as we go over the weekly flows next week. And until then, thank you, and my name's Matthew Lemieux.